Good morning, everybody. Happy Tuesday. It is a nice sunshine day out there today. I'm happy to see the sun and some blue skies. Before we get started with a Guardian title, I just had a few announcements to make for NRG agents. So we had spoke about it last week, but Chime, the CRM, if you are basically paying to be part of Chime through NRG, they have made a name change. So their name change is actually Lofty now. So if you're seeing any kind of text messages, emails coming through that you've got new leads coming in through Lofty, that is Chime. They did not get bought out. Nothing like that happened. It's just basically they did a name change. I did put a YouTube video in the NRG Connect if anybody wants to watch that and the reasoning why they made a name change. Biggest thing was there was also a Chime Bank out there, and there was just a lot of confusion. So they decided to make a name change. So go and watch that video. Other big thing I would just state is if you need any information or you need any help from other NRG agents, or you're wondering like what's going on with NRG, make sure that you're looking at that NRG Facebook page. And it's the NRG Facebook Connect page, not the public facing page. It's the agent one, where just agents at NRG are part of that. So make sure you're taking a look at that. If you need help with it, reach out to me or Francis, and we can definitely help you get logged into that. I'm gonna just start it off here. I see we do have Jamie in here, but I'm gonna start it off. Does anybody have any buyer or seller needs right now that they would like to share with the group? All right, going once, going twice, and we are gonna move on. So Jamie, are you on here? I see, I think it's your iPhone, if you want to unmute.
There we go. Can you hear me?
Yes, we can hear you and we can see you.
Okay.
Welcome.
Well, thank you.
Yes, I'm going to hand the floor over to you. I'm going to let you introduce yourself and just tell everybody in the group how you've got connected with NRG. And then today we're going to talk about educating our clients on the title experience. So I'm going to hand it over to you.
Okay, sounds good. Hi, how's everyone doing today? My name's Jamie Bodine. I'm one of the owners of Guardian Title. We're a family-owned title company that has been in business for over 50 years, actually. My dad started the title company when I was a little kid, and I've been in title for about 25 years now. My brother is the other partner, and like I said, we've got a lot of experience, and we started working with Randy and National Realty Guild probably around 20 years ago, right when Randy was pretty young and just getting started. And we helped him through a lot of hurdles and obstacles along the way. And we feel real proud for where the company is today. And we feel like we maybe had a small part in that success. So we do work with a lot of NRG agents. And we have a great following of loyal clients that we've built over the years. Jill had mentioned that she's been getting some questions about how to talk to your clients about title and closing. So I thought maybe I would just run into that real quick and tell you a little bit more, more about what we do. And so, what is title insurance? You probably get that question every so often. Title insurance is a insurance policy that protects your title to the real estate. Title insurance is different than most other insurances in the effect that title insurance covers existing hazards that may already exist in the title. So it goes backwards. It covers previous transactions that have affected the real estate. Most insurances cover you going forward, like a car insurance policy. You get your insurance set on your car, and that covers you from the effective date going forward if you get in an accident or you suffer a hazard of some sort. Where title insurance covers backwards. And so it's a little bit different. A lot of people don't quite understand that. But what it's doing is looking at the transactions and the previous owners that have had an interest in this real estate and making sure that there are no claims or someone could come forward at a later date and claim an interest in the property because maybe there was something that was missed in a prior transaction. Okay, so it's kind of a safety fence around your property, and it protects your title. So what we do is we search those records going backwards. Sometimes we have to look back over 40 years, and we look at every single transaction and make sure that they were signed off correctly. With that said, there are certain hazards or claims that exist that we could never determine. Okay, and those would be an example of that would be like a forgery. If one of the documents was forged, it's showing of record, it's notarized, but it turns out that that document was in fact forged. That person could come forward and claim an interest in the property, saying, I never signed that deed back in 1995. We were going through a divorce and my husband had forged my signature or something like that. And so that's an example of a claim that where title insurance would step in and would defend your clients. It would be a lawsuit if something like that happened. And the title insurance would kick in and hire attorneys and defend your client and also pay out any claims if in fact they lost the case. So title insurance it doesn't happen very often. I'll just be upfront with that. I mean, we do everything we can to eliminate that risk, everything possible to eliminate that risk. But like I said, title insurance claims are always hidden. No one ever knows about them. And so you always want to make sure that you recommend a title insurance policy to your client. With that, there are two types of policies. There's an owner's title insurance policy and a lender's title insurance policy. The owner's policy covers the owner in the event of a claim, and the lender's policy covers the lender in the event of a claim. And mostly the lender policy is only in the event of like a foreclosure and they couldn't take title to the property. That's why the lender is buying an insurance policy in the event that they had to foreclose and take title to the property. That's when a title insurance claim would exist at that time, and that's why the lender requires a policy. So, and you can't piggyback off of the two. So, in other words, if there was a claim and owner's title insurance is optional, a buyer can decline an owner's policy. Once again, we highly recommend it. Obviously, we're in the business, but we know, and there are claims that do exist. The cost is minimal, especially when there is a coinciding lender's policy. Then the cost of the additional owner's policy is not that expensive. But the claims can be large. So, title claims are always very large, $50,000, $100,000, because it's dealing with the real estate. And so the peace of mind you get with title insurance is well worth the premium that you pay. It's a one-time premium. It covers you for as long as you own the property, including your heirs even. So it's well worth the peace of mind to get title insurance. And we always want to have our clients recommend an owner's policy to their clients, to their buyers. If for some reason a buyer doesn't want an owner's policy, that's fine. They can elect not to have one. But we would make sure that they signed an acknowledgement knowing what they're waiving, because There has been cases where people have declined owners' policies. It turns out there was a claim, and then they come back later and say, well, if I would have known it would have covered something like this, of course I would have gotten it. But so we always just want to make sure our agents recommend an owner's policy, just so they can't come back and say, well, my agent said I didn't need one, because a lot of times people don't know even what they're waiving. It's a kind of a complicated insurance policy, and it's unknown. A lot of people don't know what a title company is, what they do, and they're just looking at saving a couple $100 or something like that, and they don't really know what they're waiving. So we always want to make sure we do recommend it. So again, the title claims are always hidden. They're always unknown. There's 2 title companies involved in a transaction in Minnesota. The buyer side title company is the one that does the title search. That's the one who examines the title. And then it's also the title company that sets forth the requirements for the closing. And then that title commitment with all those requirements are sent to the seller's title company, because everything that's on the title commitment is the seller's responsibility to clear up. So again, the buyer side title company produces the commitment, sends it to the seller's title company, and the seller's title company is the one responsible for clearing those issues, since they're representing the sellers. Title claims are always hidden. I can give you an example of one that happened a few years back, where someone bought a property as a single person. They then got married and then also divorced. And this is over a 10-year period of time. And so the record title showed the person as a single person. And it was kind of a nasty divorce, and they didn't get along. And the spouse, the ex-wife, never received her marital interest in the property. The property was sold. Again, he's single now again, and it was sold as a single person, totally fine. Everything on record title looked perfectly fine. And this spouse came forward later after she caught wind that the property was sold, and filed a claim and wanted, her $50,000 for the time that she lived in the property, and help maintain the property and help make the payments, and was supposed to get, money upon the sale of the property through her divorce decree. And none of that happened. While at the same time, now we have new owners in the property, and now that new owner is involved in a lawsuit that they have absolutely nothing to do with, don't know anything about. And if they did not have title insurance, they would have to defend that and pay out those claims, any claims on their own. And that was a case where, in fact, a claim was made and successful, and the title insurance did pay out. So again, title insurance is very important. It's well worth the premium that's paid. Like I said, it's one time, it's not ongoing. And title companies protect the property and make sure that your clients, have good title to the property. And in the event, again, something was missed, they will have a policy that protects their rights.
Jamie, can I just ask, because I do get a lot of my buyers that do basically say, I'm spending so much money. I want to eliminate the cost of things. What do you say to them? Because what I normally say is, like, I would highly recommend it. Again, I can't make the decision for you, but I definitely think you need to talk to the title company and get all of the information, because I would highly recommend it. I've gotten it moving forward. How do you explain that to them to get it down to like their level, so they understand it the best?
Yeah, I think it's just kind of educating the client as much as possible about what title insurance is. There is, like I said, a lot of confusion around title insurance. People don't really understand it. I know these sellers, they've owned the property for 15 years, and there's no need for me to get a title insurance policy, and I want to save a few bucks. You know, again, we would just provide information. Guardian Title has a lot of pamphlets and materials that we can send your way to help educate the consumer. There's also a lot of information online about what title insurance covers. Again, you know, the claims are rare, but the consequence is large. And so that's what I would really try and get through to your client, that you know, and again, they're always hidden. Keep that in mind. No one will ever know until it comes forward. You will not know that there's a title hazard that exists until it comes forward, and it'll be unbeknownst. And that's what they really need to be aware of. You know, a lot of people don't know the current status of their title. We deal with it all the time. They think that they're in title by themselves. Well, there's actually, you know, someone else in title, or, you know, they think that they did a quick claim deed to add someone to title, but it was never done. You know, divorces, probate matters, estates, trusts, wills, judgment liens, mechanic liens for subcontractors, just different old mortgages that they thought were paid off. We deal with that all the time. When a mortgage gets paid off, that lien stays on title until a document is filed, which is called a satisfaction of mortgage. Old mortgages are on title that need to be cleared up before you can close. There's just a lot of unknown information that exists in title where people don't have a really accurate picture of exactly where things are at. So, and again, you know, if you're paying cash, then the owner's policy is a little bit more, because there's no lender's policy that we can do a simultaneous issue off of. Again, when you're using financing or taking out a mortgage, that lender requires title insurance. That's not negotiable, and the buyer pays for that policy.
So that's my question. I thought that it wasn't. I thought that even if the lender has a policy, you have a choice not to take a policy. You're saying you have to get a policy when a lender has a policy?
No, you do not need to get a policy when a lender has a policy.
Okay, so my question is, since most people don't keep their house longer than 10 years, and the lender has the huge risk up front, so the lender's policy is very important when they own most of the mortgage, if you're putting minimum down, right? So if there's a title problem, the lender's going to do something about it, right? Because they have most ownership in that property. So then can a buyer, two things. One, can a buyer come later after, you know, when they decide, hey, we're going to refinance and we're going to stay here? Can they add that then on their refi instead of at the beginning? And also, what part can they shop title insurance outside of just one title company? And what part of that fee goes to the title company? Because it's kind of like you get a furnace and you add an extra, what's the word I'm thinking of? A warranty. So it's kind of like a warranty.
Yes.
So how does that matter?
Well, you could get an owner's policy later. The cost would not be very, it would cost you more to get a title policy later than at the closing. Because
we'd have much more, or why?
Well, because you'd have to do an updated title search, and you would also have to issue that policy, but you would not be able to issue a simultaneous policy at that time. You'd have to just issue a straight owner's policy.
So what's the cost right now in like an average home, like a $500,000 home? What's the cost to the lender's title and then for the buyer title insurance?
It'd probably be about $1,000 on a $500,000 house, and probably 750 of that would be a lender, and about 250 would be the owners, depending on the gap between the sales price and the loan amount. So if the loan amount is real small, the owner's policy would take up more of a portion of that.
Okay. And then,
Okay.
and then if you're paying cash, but you're gonna resell the property and they're gonna get, and it was a foreclosure, which I had heard banks, that when it's foreclosed, the banks do everything back to zero because the responsibility with the foreclosure is so great. So paying cash as an investor, do you have to get a title policy when you're gonna resell it? Those buyers, you can include title insurance for them, but why would you have to pay twice?
Yeah, if you were gonna resell it and not hold the property that long, your exposure to, a title claim would be lower. It would be minimal.
Yeah,
It would be minimal at that point. But again, these are always hidden title hazards. You never know when they're gonna come up.
right.
And
But
even
if you
through a
bought
foreclosure,
title,
even through a foreclosure, no one's gonna be able to determine a forged deed. So no
correct.
one's gonna be able to do that.
But if
Okay.
if you would be buying an owner's policy when they buy, or you suggest it or whatever, it wouldn't need to be twice. How much goes to the title company versus, are the title companies, like, are you underwritten by a larger company? So,
Yeah.
it's a profit thing too. It's like
Yes.
suggesting other things. So what's the
Sure.
difference? How much goes to the
So
title company versus?
yeah, so there are there's a handful of title insurance companies, Stewart, First American, North American, attorneys title, and those title companies are the actual insurance companies. So every title company is basically an insurance agent.
Okay,
We're issuing policies on behalf of the title insurance company.
okay,
And the title premiums charged by the insurance company are very similar between title companies. In fact,
okay.
they are published with the state and they vary a little bit, but the premium itself is very similar between all title insurance companies in the state of Minnesota.
Is the
Um,
coverage the same across? I mean, is there, how when you're getting car insurance and this one does this and this one does that and this one has a reputation for that, is there any difference with title insurance companies, ones that pay out faster or do more
um,
coverage, or anything different between them all?
as far as like payout faster and so forth, it's more on the rating of the insurance company. Our underwriters are all AAA rated. It's a Demotech, I think it's called, that rates title insurance on the stability of the title insurance and reserves that they have in place and history of paying out claims. And you want to make sure that you're working with a highly rated title insurance company, which most title insurance companies are AAA rated.
Okay.
The title company itself, your local title company, I think you asked, what portion goes to them. That's variable. It kind of depends on volume. A 70-30 split is pretty common, where 30% would go back to the title insurance company and 70% of the premium would stay with the local title company.
Okay.
70-30, 80-20. Sometimes you can get into a 90-10 if you're really a big title company doing a lot of volume.
Okay.
But yeah, that premium is shared between the actual insurance company and your local title company.
I have a
Okay,
question
thanks.
about your example.
Sure.
So you said that in your example, the present, like the current buyers were liable to pay?
Yes. Well, and the only reason why they are liable, not liable so much, but that they are involved is because they are the owners of this real estate at this time.
So
And
they,
the claim is made against their real estate. And so
how did the seller not have to pay and the buyers did?
well, it was a title claim. So the seller, I don't remember the exact details, but there was no money there. So, but this ex-spouse was entitled to over $50,000 through her divorce decree upon the sale of the property. So
So
the
the money was
seller,
there.
the
I don't
seller
understand.
was long gone. I'm not sure exactly all the details of what when they would have gone after the seller. You're right, and they would have been involved, but you know, the seller didn't have any money, or I'm not sure exactly what happened there. But the point of it is that the claim is made against the real estate where
The
there are
property.
new owners.
Oh,
And
wow.
yeah, and so because the real estate is there, that's where the claim was made. That's where the funds were supposed to be dispersed from, out of the sale of that asset.
Mm-hmm.
And that never happened.
That's,
And
how would they never catch that when it's 1 to buy, 2 to sell?
well, because this person he bought it as a single.
Yeah.
This is over a 10-year period. So the record
Yeah.
title showed him as single. He got married, but they never put the wife on title, but she still had a marital interest automatically. As soon as you get married,
Right.
whether or
But
not you're entitled or not,
yeah,
you have a marital interest in that
right.
property.
1 to
And
buy, 2 to sell. We all know
right,
that. So
right.
how, I mean, wouldn't the
Well,
title company
then,
be liable right there for not catching that? Whoever
but
did the work?
it was never disclosed. This is over a long period of time. This is over a 10-year period of time now. Then he got divorced, still
Yeah.
owning the property. The record title stayed the same. And now he deeded out. Now he's single again. And he just deeded himself out single, which he was. He was single at that time. So no one knew that he ever got married and divorced. And he didn't
Yeah, so
disclose that because he
so
didn't
how
want to, because he didn't want to pay her.
so how did that 1 to buy, 2 to sell thing come in? How does that come into place?
That's a good
Because
question. Yeah, that's a
yeah,
good question. So sometimes it's hard for a title company to determine marital status. It is 1 to buy, 2 to sell. So you can buy a property. Now, if you're married and you buy it yourself, that's called a purchase money mortgage. And that is supposed to be on the face of the mortgage. And it's supposed to say right on there, this is a purchase money mortgage. And what that means is it's just basically a mortgage that was used for a purchase as opposed to a refinance or a second mortgage or something. And all mortgages in the state of Minnesota have to show marital status. Okay, so if you're married and you buy a house by yourself, the face of the mortgage is going to say purchase money mortgage, and then it's going to say John Doe, comma, married. So then when the next title examiner looks at that title exam, they are going to see that this person was married when they bought the house, and they're going to call for the spouse to sign off upon a sale. Okay. And then if you take out other mortgages, if you refinance, take out second mortgages, anything other than a purchase money mortgage, the wife has to sign. So you're going to see signatures. You're going to see John Doe and Jane Doe, husband and wife. And you're going to see signed and notarized signatures by both spouses on any mortgage other than a purchase money mortgage. And then, so a title examiner then would see that, and they would call that out on the title commitment. And it would say, we're going to need a warranty deed signed by Jane Doe and John Doe, husband and wife. And then it comes out later that, well, we're divorced. So I get the property. Well, then we need to examine the divorce decree and make sure that that is in fact the case. And then we would follow the requirements of the divorce decree for the ex-spouse. Or, well, she passed away. Well, then we look at, how they held title. You can hold title as joint tenants with rights of survivorship or tenants in common. Joint tenants is where the property would pass automatically to the surviving person. Whereas a tenants in common would be like a 50-50 ownership where, 50% of the estate would go down through that person's would go through a probate court and determine any heirs. So it all depends on how you take title, whether it's joint tenants or tenants in common. And it's a very important question that needs to be asked at closing, which all our closers make sure that we ask the client how they want to hold title. If it's joint tenants, it's an easy, simple transaction. If it's tenants in common, then it's a probate matter, which is, a 6-month ordeal and probably about $5,000 in attorney fees. So, it depends on, again, how they're holding title, whether it's joint tenants or tenants in common on that. I think I strayed off a little bit on your question, but you were asking how would we know if someone's married? Was I able to answer that for you?
Yes.
Okay.
Jamie, there was a question in the chat. Shouldn't the divorce attorney make her sign a quit claim deed for the home during the divorce? Do you think that was maybe a misstep on that end?
Yes, that is a good requirement. Not all divorce attorneys make that requirement. Sometimes spouses don't cooperate. Divorce attorneys can put language in the divorce decree that if in fact the spouse is unwilling to sign a quitclaim deed, that this divorce decree will act as a quitclaim deed. And so sometimes we do that. But sometimes the person who is leaving the property or leaving the house doesn't want to sign a quitclaim deed until they get their payout. And that may not happen for several years. If, it's determined that, upon sale of the property, that's when you get your payout. And so sometimes they don't want to sign a quitclaim deed, until they get their payout, which could be several years later. So it gets tricky like that on how to do that. A good divorce attorney is worth a lot, on how they can prepare these divorce decrees to make sure everyone's protected. And they're not all the same. And sometimes people do their own divorce decrees, which is fine, but things change. People are amicable at one point and then all of a sudden they're not. And then when you have someone that's not cooperating, you better make sure you have, a good solid divorce decree that is enforceable to get the job done when someone doesn't want to cooperate.
Okay, back to the original, back to the original example that you used. So if there's a claim against the property, but there was no profit, there was no gain or whatever, how are the buyers liable?
That is something that would be probably handled in the court. But again, it would be determined through a court action.
So if there's no equity, they would still be liable, the buyers?
Well, I'm not exactly sure how that would be determined or what the outcome would be in that scenario.
Because I thought you said
that would be something that a judge would have to decide.
Okay.
On how that would be handled. So again, but it would be a court proceeding, and whether or not there was equity or not, you still have a lawsuit that you have to deal with, and you'd have to hire an attorney at whatever $300 an hour.
Okay, but that doesn't mean that the buyers would have to pay.
No,
Okay, the
Well-
protection will cover maybe the attorney fees then?
Yes.
Okay.
Yes.
That
Yes.
makes
The
more, that
title
makes more.
insurance covers both legal and attorney's fees as well as any payouts that would
Okay.
be if they lost, the claim.
Okay,
Yep.
that makes more sense. Yeah, I thought
Yeah.
you said that the buyers were liable.
Yeah. The buyers aren't really liable. They're just more or less involved by being the owners of the property. It's not necessary that they're liable or that they would have to pay. If they didn't have title insurance and they lost a claim, then they would be liable.
So if they didn't have title insurance, they lost the claim, they have to pay the other owner that was, we'll say. Could they not go back to the owner that they bought the property from and then sue them for the money that they lost because of that, if that person did have money?
Yep, they could probably do something like that. Again, that's more of a legal question that
Gotcha.
that I probably could answer. But yeah, I would think that makes sense. You know, and it's, it would be a lien on the property. So it's something that they would have to deal with if they ever sold the property or refinanced or anything like that. This would be, it would be a valid lien on the property that this person from 1995 is owed $50,000, and that would be filed on the title. So, again, with title insurance, you'd be protected. Without title insurance, you'd have to deal with that on your own. And I'm sure it would be a very, very unhappy situation for someone to own a piece of property where they had to deal with something like that on their own.
I think the moral of the story, Jamie, is the fact that it's an example of like, buy the title insurance, it's going to protect you. Even if something comes up, 10, 15 years down the road, you have this policy that's going to protect you. So you don't have to pay out all of this money or navigate a situation that you don't even know how to get into. So
correct. Yeah.
Another question.
Again, again, it is a rare occurrence. That's kind of an extreme example, but it happens. It does happen. I can tell you that. And there are many different types of title claims that can be made. And that's just one example. Again, there's heirs where, someone had passed away and one of the brothers doesn't get along with the family, moved to California, sold the property, and he never got any money from his dad's estate. That's another one. Divorce decree ones are common. Mechanics liens, where someone worked on the property, did some rehab work, and they didn't like the work that was done. It wasn't up to their standards, so they didn't pay. And then that person has a mechanics lien, even if it's not even filed of record. If they worked on the property, that's a valid lien. And that's one where you would not know if that was not disclosed. That new owner would have to deal with that. If that mechanics lien forced their lien. And they would be involved. It's not necessarily that they're liable, but they would be involved in a lawsuit.
Jamie, there's a question in here from Michael. Are there any special considerations for a co-op? I'm not sure. Michael might have to get into a little bit more detail about that, but it's a question in the chat.
Yeah, so the co-op, you would have to, that's where you're buying shares in a property or an interest, an undivided interest in the property that has your rights. Title insurance does apply to co-ops as well. And that again would be if there's any claims, made on the co-op by an unknown person. And again, they're hidden. So yeah, the co-op would be involved. And I can't off the top of my head give an example of how title insurance would affect a co-op. but I know we do issue title insurance on co-ops. You know, I could certainly look into that more. Co-ops aren't all that common for us, although we have closed co-ops. So you know, that would be kind of a one-off situation that maybe I could look into and get some more details and get back to you on that, Jill, if needed.
Perfect.
Yep.
Nope, that's a very, again, it
Yep.
doesn't happen all the time. So totally
Right.
get it.
Yeah.
Can I ask you, because it's another thing that I know that a lot of NRG agents don't know, that we work with you and we can get paid our commission at the closing table. That's not something that can happen with all title companies. So do you want to go into a little bit of details about that?
Sure. Yeah, that's a great program that we have with NRG. You know, we're able to do that because of our close relationship with National Realty Guild. On files where we are dispersing, which would be on the buyer side files, we can issue the commission check directly to the agent at the closing. So we get this approval from Francis and the transaction coordinator teams. Making all your paperwork has to be submitted. But the commission check again is issued directly to the agent. We can even do a direct deposit. So if you're not at the closing, as long as the closing happens before 3 o'clock, you will get your funds same day in your account. A lot of agents really like that. You know, title companies would mail, you know, mailing checks to Edina, getting those processed and deposited to your account can take some time. You know, the agents really appreciate it here with a little bit slower market, you know, getting paid quickly, no worries about delivery times. It makes it real easy for the agents, you know. And we always looked at it as, well, you know, everyone else gets paid at closing, you know, the sellers, the lenders, the title companies, everyone gets their check, you know, right at closing. And so why not offer that to the agents as well? I mean, they're the one doing all the hard work, bringing the clients to the table. They should, there's no reason why they should be delayed in getting paid. So we launched that program with Randy maybe a couple of years ago, and the agents that use it really like it. You know, you don't even need to attend the closing if you can't make it. And those funds will be in your account same day. And so it's something that we offer. And we're able to do that with our close relationship with National Realty Guild.
I have another question in the chat. What happens if the owner's name is simply misspelled on the at title? Is that easily reflected at closing? Rectified.
Yes,
sorry.
that is something that, go ahead.
Oh, she's asking if it's easily rectified at closing.
Easily rectified. Yeah, so that does happen a fair amount of time with typos and so forth. You know, if it's not caught at closing, that's the way they will be on title of record now. So, you know, with a misspelled name, which is not good. We can rectify that with a quitclaim deed, which would have to be refiled with the county. Basically, saying that there was a typo, and sometimes we have to use an FKA, like formerly known as, and an NKA of now known as on the quitclaim deed to correct the title. But to your point, going into title with the correct spelling, middle initials, anything else, junior, senior, that is very important, because that can also help differentiate you from other people that have a same or similar name. You know, if it's, you know, Mike Johnson, you know, a very common name like that. When we do the title search and all we see is Mike Johnson, we have to go through, there's going to be a lot of judgments out there against that name. And we have to go through and determine, you know, is this possibly our guy or not? You know, we don't know. And so there's a lot of research and there's a lot of extra work that could be involved in determining, if in fact it is the same Mike Johnson. So having your name with middle initials fully spelled out is a good policy and is very important to help, alleviate any frustrations or delay of closings and things like that that can happen when there's typos or misspelled names or, vague, vague common names, anything like that. Because if a title company is not sure, they're just going to call it out. And then it's going to be up to the seller's title company to prove that it's not the same Mike Johnson, and that can delay a closing. So making sure that you go into title with the correct name, as much information as you can, middle initial, full middle name if you want, is a good thing to have, especially with common names. And a lot of title companies will take that off the PA. So, if your PA assigned Mike Johnson, that's how they're going to go. That's what they're going to roll with. If it's signed Michael Thomas Johnson, the third, then they're going to go with that, which will greatly help reduce any confusion. So just want to make sure your PAs are full names, middle initials. If there's juniors or seniors or anything like that, make sure you include that on the PAs, because that's what the title companies are going off of. And they can just make for a smoother closing.
Jamie, is there anything else us as agents could maybe do to help the title process besides what you just said about the PAs and the names? Is there any kind of common things that come up that you wish maybe real estate agents would help out a little bit more with?
Yes, great question. Love it. Love that question. For the title company, more information, the better. Any title company would appreciate as much information as you have when you, open up a new file with them. Closing worksheets, all title companies love closing worksheets. If you're on the buy side, we do want to have, seller side title company information, seller side information if available. But the main thing that we want to have as well is full contact information for the client. Name, phone number, email, are they text friendly? What do they like? Do they like phone? Are they email people? What's their preference? Anything that about your client that could help us basically communicate with the client or help us communicate with other parties involved in the transaction. So it's more or less just having good, accurate contact information. If there's anything odd or different or unusual that we need to be aware of, if you can let us know. This is my mom's house, but my daughter is really going to be dealing with, most of the closing issues. So please work with her. My mom's elderly, and so this is the person that you need to work with, something like that. If there's anything like that going on. But again, it's just having good contact information so we can reach out to the client and make sure that, everyone's on the same page. As these closings, there's a lot of communication that goes on. There's a lot of people involved in the transaction. And, the more information that we have, the better. So just keep that in mind when you're working with your title company, just to make sure that they do have good, accurate information. And again, if there's anything you want your title company to be aware of, preferences or who to work with or how to communicate, anything like that is very helpful. That's a great question though. So more information, the better.
That's a good way to put it for sure. I am going to open up the floor here to see if there's any other questions for Jamie in reference to anything title. Any questions you guys have whatsoever? Throw it out to Jamie here.
Okay, how far back does the insurance go?
We're required to go back 40 years.
Right.
So, but if it was prior to that, that's what our underwriter requires us to do.
Mhm.
So if it's something that happened that existed prior to that, that would still be covered. And the reasoning behind that is after a 4-year period of time, they feel like, that claim would have been exposed by now.
Right.
So, but if in fact the claim existed prior to that, the title insurance would cover that. But we're only required, not only, we're required to go back 40 years
Mhm. Yeah.
in certain situations. Sometimes we can just go back to the plat if it's a newer development or a development that's been platted. We can go back to the original filing of the subdivision.
Or
And
when it was just dirt.
yep, when it was just dirt. Yep. Yep.
Mhm.
And
Yeah.
so, but other than that, yeah, we have to look back 40 years on a purchase transaction. And again, the title insurance would assume that any claim that existed prior to that would be either extinguished or no longer.
And you'd assume that the seller has had the title insurance and there hadn't been a problem and stuff like that too, but nevertheless,
Right, right.
everybody should have title insurance. I can't think of
Yes.
any not to.
Right. The only reason not to is if you wanted to save a few bucks. And again, when there's financing involved, we're talking
Yeah.
about a couple $100s for an
I
owner's
know.
policy. Yes, if you're buying a property cash, then you're going to pay the full premium. You know, depending on the value of the property, anywhere from $500 to a couple $1,000, depending on the value.
Yeah. Of
But it
course.
is peace of mind. It is peace of mind, helps you sleep at night. It's a safety fence around your property. And again, I just can't stress enough that, title companies do everything they can to eliminate those risks. But like I said, there's certain hazards that are there that no title company would be able to determine. And that's why you need title insurance, because it's unknown and it's something that exists already but is unknown.
Yep, very good. Thank you.
You're welcome. Anything else? I know title can be kind of boring, so that's all right.
No, Jamie, we appreciate your time today because again, these are things that just come up.
Yeah.
I can't tell you how many different like divorce situations. It's an uncomfortable situation, but it's definitely something that comes up. I've had divorce, I've had trust issues, I've had liens on properties that we didn't know about. I mean, there's all sorts of things. So it's definitely, I think, working as a team. We're the real estate agent, we've got the title company, and then we've got lenders. And it's like, definitely just stay in your lane and educate as much as possible. But again, like I had said last week about lenders, if you have questions, bring a title company person in about them. Jamie would be more than willing to help you. I know that. So, I think it's just using those strong suits and staying in your lane, but educating as much as you possibly can.
Absolutely. That's the most important thing, because a lot of people don't know what a title company is or what we do. They
How
just
about
don't.
how about a lots and land purchase? How big of a deal is it, to get a title company involved on that when it's like a $20,000 land purchase?
It would be the same. It would be the same process for the title company. The title company is always focused on the land. And they consider, the house just an improvement to the land. That's all the house is just an improvement on the land. The title insurance is focused on, again, the real estate. So even if it's a $20,000 purchase, the premium is going to be low. We would still do the same 40-year search to make sure that no claims can come, forward. The process is the same, whether it's, a $20,000 lot or a $500,000 house. The process is still the same. the premiums obviously vary and would be much lower on that. But, you know, a title company would be happy to take a look at that for you. I don't think there's, you know, yeah, the title companies want to make premium, but, you know, it's something that I think any title company would be, you know, willing to work with you on for sure. Does that help?
Yeah, I just wasn't sure if, you know, to let people know there's, yeah. Okay, thanks.
Yeah, it's the same. And again, the title insurance is just focused on the real estate, you know, on the land, basically. And that's where the claims come from. That's where the liens are held. It's all on the land. Because that, you know, and that's the house sits on the land. So the house is part of the land. But you know, all our due diligence and our research is always on the real estate, the lot 7, block 5, New Falcon addition to Minneapolis. That's what we're focused on, is the legal description of that piece of property.
That makes a lot more sense if you're buying a lot, that the title insurance would be most important because of those lot lines right at the beginning, and you're only buying land, so your only value is the land. So if there's a title issue, you're really screwed versus.
Yeah, right.
Because I do know somebody who had a lot line issue, but title insurance wasn't anything that took care of it. It was a lot line issue because of use, you know, because of 20-year, the neighbor, you know, that things were never corrected, and they were always okay with it because they were both big lots. And so, well, the
Like
fence got put here, no big deal, but 20 years later, when they sold the property, it was a big deal.
Right.
And it
Yeah, and
didn't,
those are be like an easement situation or something.
but it wasn't an easement. It was just, hey, he put a fence here, we planted trees here. Those neighbors got along. The new neighbor had visually, you know, he looked at the thing, did the whole thing and said, I own all of this. So not only that, then you got a crappy neighbor. I mean, you know, then you have neighbor issues forever.
Yep. And that's just another example of it's unknown, or maybe it was known, but they just were fine with it. But either way, it always comes out at closing. It always comes out. All these issues are determined when the, you know, the title is searched, or in the event of a claim, someone unknown comes forward. So it's always unknown.
I have an unrelated question since we're near the top of the hour. What are you seeing on all these closings you're doing as far as financing and rates and sellers? Any, you know, are you seeing things different than a couple months ago as far as creative financing, as far as cost, you know, more cost paid, more appraisals not appraising, things like that?
Yeah, some of that stuff we're, you know, unaware of a little bit. I would say we don't have a real accurate picture on all those different scenarios. We're kind of the, you know,
on
we're in
appraisals, you guys don't know any.
Not
I mean,
necessarily,
you're not in
you
the
know,
middle of that ever.
no, we do not
You
get
don't
involved
know.
with, no, we're
Okay.
not involved with appraisals. It's totally separate. And sometimes, you know, if it's not appraising, we've got a title search all done. We're ready for closing. And then, you know, all we're told is it's not closing, or it's
But I mean, so are you
delayed.
in the last couple months, are you seeing less closings make it to closing? Are you seeing issues with appraisals, or are you seeing seller financing that's creative when you're looking at paperwork and
Right.
you're not?
You know, we have seen some more seller paid closing costs, I would venture to say. So I think we're seeing more seller paid closing costs than we have. You know, interest rates are higher. We all know that. I think they came down today, someone told me, but I know they change every day. It's just hard to know. But it seems to me too that maybe some people are just kind of grasping the new normal here, that this is, you know, maybe where rates are going to be for a while. And, you know, maybe I'm not going to put my life on hold any longer. You know, when it all first happened, when the rates went up, everyone was like, oh, I'm not doing anything now. And I'm going to wait for rates to come down, or whatever the case may be. But I think some people have come to the realization that it's just, you know, this is where things might be. You know, they might come down a little bit and then we could refinance, but I'm not going to put my whole life on hold. any longer. And, you know, we need a new house, or we need to move, and we're gonna go for it. So I think there's some of that coming. It seems like our closings have picked up a little bit. And I think maybe that's some of what's behind that. You know, I know, I think properties are sitting a little bit longer. I think buyers maybe have a little bit more of an advantage, maybe on negotiation and inspections and seller pay closing costs and things like that. But you know, the world of real estate is always changing, and you know, I think sometimes these changes are initial shock, but then things kind of settle down, and it becomes the new normal, and things can get back to where we need them to be. And you know, again, not to hold up your whole life because of the interest rate or something like that. But
Jamie, I just did have a question here. I know we are at the top of the hour and everybody's time is valuable. Janelle just had a question in reference to manufactured homes. Can you explain the title, surrender to the register of motor vehicles for a cancellation with time?
yeah.
Yeah.
Isn't there a
the,
license number under the sink or something on those things?
What's that, Randy?
Isn't there like a license number underneath the sink?
Yes, there is a license number that's on that unit somewhere. It could be under the sink. Sometimes it's on underneath the unit. If there's a tongue or something that's tucked underneath or something like that. So with the manufactured home, it's sitting on land, right? And so who owns the land? Well, the seller owns the land, but they have a manufactured home that could be, whether it's fixed foundation or not. We have to file an affidavit of surrender, which is surrendering the title to the state. And so that's something that we do at closing. We do need the certificate of title in order to prepare these documents. And sometimes that's a challenge for people. We can get a copy through it's basically like the DMV. It's like a car title almost. And we want to surrender that to the state to prevent anyone from, you know, selling the unit from underneath the lender or something like that, or removing the unit from the land. And it's more of a lender issue where that's involved. But again, we do need the certificate of title. Then and that can be either the seller has that, or we can get a copy through the DMV. And then that certificate of title, along with an affidavit to surrender, needs to be filed with the county. And again, it's more or less to prevent the lender in, you know, so they don't lose any value on the real estate. And then we also, if it is a fixed foundation, we can file that affidavit of fixation or affidavit of fixation as well to satisfy the lender on that. But that is a process where the seller would need to cooperate and help provide that information so we can get those documents filed with the county.
Those are always fun. Always fun, Jamie.
Yeah. Yeah, they can be.
Yes.
But yeah, and so again, that's more of a lender issue again. But a buyer should want to do the same thing as a lender. If they're paying cash or something, they want to make sure that they have that certificate of title. You know, like when you buy a car, right? You want to have that certificate of title, so that's yours with your name on it, transferred to you, along with the warranty deed for the land. So you'd basically get two titles. Then you would get the certificate of title, like a car title, and then you would also get a deed for the land. So you'd have two separate titles there.
Perfect. Randy, anything you want to end the call with today?
Well, I have I've got an email that I might post from the Milwaukee Association regarding the NAR lawsuit, which has nothing to do with us. And regarding that type of stuff, I would say, like, I've been listening to parties try to influence the realtor community since 1998 or 7 when I got my license. And we're all still here working, and it doesn't seem to be an issue. But it's just legal stuff in other states that I could post what I have. I can't I'm not gonna name any names, but I don't know. I don't understand how this happened. I swear. Yesterday I was like, everything's going along pretty good lately, and now today the Department of Commerce reaches out at 9 a.m. to me. I'm like, huh. So I recall the transaction that an agent had is very complicated, and I think the buyer actually got mad that they didn't get their property or something like that. But I have to deal with this. So, with the NARS loss and that they're going to appeal, and I just don't see any rapid changes coming anytime soon. I do know that there's a copycat case in another state. The exact same scenario, but NAR will appeal their stuff and try to see what happens, because they don't feel like there's any price fixing, and we definitely don't price fix. You guys get to charge whatever you want. So I just don't I don't want to sit around and go in circles about something that we just don't have any real information about.
Very true. And I do feel like there's a lot of stuff going on out there. So I think we just, everybody just needs to kind of pause for a minute, because again, it's everywhere right now. Everybody's talking about it, but, we're still doing real estate. We still need to move forward, and we just need to do what we're doing right now until we see something come across.
Yeah, exactly. Mm-hmm. I mean, everybody thought Zillow was taken over in 2000, and we're all still in business. So.
Yeah.
All right. Well, I'm going to thank everybody for their time today. Jamie, I'm going to thank you, especially. This was very good education for agents. Again, we are going to have you back, just because you are our preferred title company. You answered a ton of questions. So again, everybody will be seeing Jamie on these calls. And he also did state, if you have any questions, just reach out. He's willing to help. And anything at all.
Even if it's not our file, and you just have something's not making sense to you, or you just want a second opinion. Title is a lot of opinion, and we have a lot of experience, and sometimes you can see things different ways, and it takes experience to know what's going to be the smoothest path. And so we're here for you guys. We're willing to help. We love working with NRG agents, and by all means, reach out. There's no dumb questions. Don't be bashful or shy. We just want to help when we can, and do what we can to help close these transactions, and create referrals and have happy clients. That's what we're all about. So by all means, reach out if we can help in any way.
Perfect.
Cool.
All right. Thank you, Jamie, again. Thank you to everybody on the call. We will see you next Tuesday. We have a great social media friend of mine that's going to be talking to us about how she transformed her business using social media, and how she is going to give you some tips and tricks about that. So I will see you guys next Tuesday. Reach out if you have any other questions, and have an amazing week and do something great.
Thank you.
Thanks.
Bye, guys.
Thanks, Jill.
Awesome.
Thanks, Jill. Thanks, Randy.